Hello guys, good day to you all. My name is CryptoKeep. I'm not feeling too well, so if my voice is a bit low or not too clear, you should pardon me for that. So I wanted to discuss about validating and identifying pullbacks. Everybody can look at a chart and identify that we have a pullback. But so many people when trading, they make the mistakes of calling calling a sideways movement, or rather a consolidation. They call it pullbacks. I've seen a lot of expert traders, gurus, tutors, mentors who make these mistakes. Why? It can be good, it can also not be good, because as per my rules, I want to filter everything to take only the ones that look best. This will make you to avoid not just mistakes, but avoid bad trades. Especially when you are reading market structure, you need to know which pullbacks are valid, and you need to identify them and validate to know that, okay, this is a valid pullback and not just some consolidation or sideways movement that you are taking as a pullback. And we already know what constitutes a market structure. We know that in the bullish market structure, we have a low to an high, an higher low, and an higher high. The inverse is true for a bear market. So I will be using pullbacks in a bull market to do the examples today. You can just invert it to know which is valid for a bear market. So let's get onto it. I'll be using this CHR chart. I've been trading this coin for like 2, 3, 4 days now. It's been okay, not to back and complain. I took a trade on this particular zone here. I was expecting here, but then the correction didn't quite get there. Went higher, didn't close above a feet, so I took the risk of taking a trade here, and then I messed up. I didn't really mess up anyways. I took 3R, that's 3 to 1 reward to risk on this trade. I hesitated at this point. Yeah, around this point. Then I was expecting a pullback to this level, but then I didn't get it. The pullback didn't quite give me the type of pullback I wanted, only for the price to rally. And if we check the percentage of rally from the point at which I hesitated to the high I made 55%, I could have made 20R on this particular trade. Anyways, fast forward to yesterday, I took another trade on it, but then that is not the topic for now. So let's get into it, and I'll be showing you on my new fund time frame, the 22 minutes. It came to me. I didn't do discovery on it. It just came to me. Then I studied it, and it was perfect. Normally, I do use my 15 minutes or the 30 minutes. And like I used to say, the 30 minutes and the 15 minutes, they are the same thing. Just like the 90 minutes and the 180 minutes, which is the 3 hours, they are also the same thing. But 22 seems special as of now. It can change. Okay, let's get to identifying pullbacks. So there are 2 ways I will show you, not necessarily 2 ways. Like I said, we have a market structure, which means higher high and higher lows. So the 2 ways in which I will show you is with a swing, then with single candles. And as you know, a swing can be a series of candles, maybe from this low to this high. That would be a swing, whereas per candle is just one single candle. So you learn to identify the tops and bottoms first with each candles to know if we have a top or if we have a bottom. And you know, in swing top and swing bottoms are the structural highs and structural lows. I posted recently, not recently, quite a while ago, the image I made on identifying tops and bottoms, where I said if we have a candle making a low and then we have the next candle closing above its highs, then we have a minor top. And if it closes above the highs of the previous two candles, we have an intermediate, bottom in this case. And if it closes above three previous candles highs, then we have a major bottom. So that is what we'll be using again today in combination with this. So the title for this lesson should be identifying pullbacks and swing corrections, or validating a swing. So let's get on to it. Where should I start? Okay, let me start from this lows. So put this into consideration. So we have from this point, we have price rallying from these lows. We have it moving to this high before we can see any form of correction, right? Now, this correction that we see, this series of red candles, is it a valid correction? It is a correction, yes, but is it a valid pullback, or is it a consolidation or sideways? How do we want to identify that? For this to be a valid swing, right, we have a low to an high, then we have an higher low and a high. Take this higher low and this higher high as just one candle. In that case now, let me do this. Let's take per candle now. We have this candle, this, then this is low, and this is high. Let me move it sideways. Do we have something similar to this? This low is quite lower than this very one. So clearly, this is an higher low, and this is just two candles. That means in structures, we can have a valid structures like this with just two candles. So if we are to do that, this means the high of the previous candle was broken and probably closed above by the high of close of this current candle. So that denotes that we have a continuation. But in the essence, or in the case where we have a move like this, this is the first candle, we have a low to a high. That's the low to the high of the current candle, and the next candle, the low is higher, but the high is also lower than the last candle. Will you call this a pullback, or you will call it a sideways movement, hence a consolidation? I will say this is a consolidation. And in market structure, if we keep having higher lows and lower highs like this, what will you call it? Don't go into patterns now. You will say the price is still consolidating. It's moving sideways. It's in a range because it is well contained between the lows of that initial candle making the highest high and price, or let me just say the lowest low. So all other price candles are contained well within its ranges from the low to the highs. And until we break above like this, or we break below that very low, before we can confirm that we have a structural continuation or a reversal. So in this case, if it happens to close above the high of that very candle, then we will say the bullish continuation has resumed. Now knowing this, likewise, if we choose to go and close below of these very lows, what are we going to say? Then we will say the price is probably reversing. Okay, Bear that in mind. So when you look at this low, now let's go to this very candle. Let me make it bold. Oh, why is it too big or too bold? Okay, so we have this very lows and this very highs. Then we have all this correction contained within the lows and the highs of this particular candle. So do we have a pullback here, or do we have a sideways movement? Sorry, to me we have a sideways movement, and until we go below the low of this low to make a valid lower low to this, that is when we have a correction or a valid pullback. But then validating tops and bottoms, do we have a top at this point? We need to see a top before we can have a decent pullback. So let me quickly see if I can get the image for the tops and bottom again. I think it will be helpful in this instance. Okay, I have it. So this was the image I made. I personally made this just to remind myself of some things. And when I did post this on my Twitter and the Telegram group, I said this was my opinion as of the time I made it, and my opinions can change. So now we are talking about tops, right? Now I said this is an intermediate high or intermediate top. So for this to be an intermediate top, we have high higher than previous size, which is very high, higher than previous size, followed by a candle with a low lower than previous two candles low. And this is a low, it is lower than previous two candles. This is 1, 2. So this low, the low of this candle must be lower than the low of this and the low of this. I hope you understand. And if you look at it, that denotes this having a low, high, higher low, higher high, then lower low. This can be a lower high, but there we are talking about lows now, so we have a lower low. Then I said here on this right hand side that we have major highs and lows. So let's talk about this major high. Here I said high higher than previous highs, which is me. This high higher than previous highs, followed by candle with low lower than previous 3 candles low. So this low, the low of these candles is lower than previous 3 previous candles lows. So this 1, 2, 3, that makes it a major high. So let me quickly minimize this. So we have this candle high higher than this highs, right? So for us to have this as a top, then we want to see a candle making a low lower than the low of these candles. So in that case, we want to see something like this. Let me use this. Something like this from here to here. Then something like that here. Something like this. Where this is this candles, this is a high. Then we want to see another candle going lower than the low of this candle. But then bear in mind, there is a catch here. Bear in mind that we have hunts, right? What people call manipulation, stop hunting, then deviation, right? We can have the another candle moving below the low of this low and then closing right above it. Does that constitute that we have made a lower low to this candle? We are talking about per candles now, single candles, 1, 2 candles, not the swing. Yes, it means price is turning the moment we go below the low of that previous candle. Look at all these candles coming up. The low of this one didn't go below the low of this. The low of this one didn't go below the low of this. Likewise this. Even this indecision dragonfly, this very particular candle, so they didn't go below the low of this candle, which still shows bullish bullishness in this market. But then this, from this candle to this candle, we couldn't go higher, we couldn't go lower. So this, what we have here, is sideways movement. The price is ranging, consolidation. This is no pullback. But if we happen to see a low of any of these candles going below the low of this particular highest high making candle, then we are likely turning in price. Turning, I mean we are likely correcting. Now we are having a valid pullback. But is it still a valid pullback? How do we then validate that the pullback is pretty valid? If we make a low below this low and it closes above of it, just like we have here. So do we have that valid pullback there? We have a pullback, yes. But then you must understand that we also have stop counting. Market makers can choose to manipulate the market by pushing price lower than this low in order to grab liquidities that are below this very low or below that very candles low. If you go on a lower time frame than this, maybe the 5 minutes, 3 minutes, 1 minute, there are a lot of structure here. So there are a lot of liquidity also resting below here. So if we have a wick into it and then closing back above of this, then that is probably a liquidity grab. So the correction may be very minute and then we continue back up. But if we have a close, a candle close below of this particular lows, then it means the pullback is valid. So then we have a valid pullback. But in deviations, we can also have a candle close below this low and a nice candle will close back above these lows, and then the next candle will just retest it as support only for price to move higher. But then it means we already had a pullback. Some people want to see two candle closes below a low to validate that we have a top. This thing I'm saying is also valid for strings, because the same way we validate two candles is the same way we validate strings. This swing from this point to this point is acting now like one candle. So please pay attention. This might take a bit of time because I'm not feeling that way, so I can't really speak too much, but slowly. So here now it is a sideways. So if you're trading supply and demand, this is something that we call rally, and this is where we have a base. So we have a base here, then this is another rally. Now look at this. We made another high here, right? So remember, this was still the low, because it is this low, it was this low that we started ranging, where we made a new base, or rather people can call it reaccumulation, range, anything you choose to call it, but it is sideways. Then look at this particular highs. We made this high, then where is the low of that high? That is the very low. So do we have a close below of that low? This very next candles, it just wicked below of it. Like I was saying, it's wicked below of it. That shows us that we have a lower low. Yes, price now is turning, as in not reversing, but we are correcting, we are pulling back. It has shown you that it is a pullback. But then price refusing to close below it at this point means we might just rally the next moment, because this now equals a pin bar. But then the third candle, we had a value close below it, which means yes, we have a valid correction. This is no longer an hunt, or it is no longer manipulation. Price now is seriously wanting to correct, and if it gets to the point of entry and breaks it, then that correction has led to a reversal. So at this point now, we have a valid correction. But if you look at this high and this from this low, you think it is strange. Yes, but this was the candle that made the highest high. So it is the single candle which we will use its lows to validate if we have a top. Now, if we have a top in a swing, then that top is showing us that the price is ready to go to retest lower levels. It doesn't mean that the market has reversed. To know if the market has reversed is where then we will play swings. And looking at this point, this was no pullback. So we had a swing from this level to this level. Then we have a pullback because the candle making the highest high, we've had prices closing below of its lows. Not just closing below of its low, but going below of its lows. So we had a top here. This kind of top, we didn't get the next candle closing below it, but we had the third one closing below it. So we still had a kind of minor top. Minor top at this point. A minor top means it can get broken. Price can still go higher. But in this case, there was no top because we made a top. We didn't go below these very lows. Not by a wick, not by a close. That means this was no top. And for us to not have a valid top means we are still going higher. That is how I know if price is still going to continue to rise in some instances. So now we have passed that. So now we have corrected to this point. But this case is tricky because the candle breaking the size is the one that made the very last lows. But it is still valid because it closed above a lot of candles, which made a pullback. It even closed above the minor top that we had. So we will take as also a valid low. Then looking at this candle again, the next one to it, it was the one that made the very last high. Now this is our low, right? Now we have this swing from here to here, then this swing from this top to this bottom, then this swing from here to here. Now looking at this candle again, the one that made the very highest or last high, do we have a close below its low? Yes, this wasn't a wick, it was a full close and an engulfing close for that matter. So it showed us that we have a top at this point, but we have a top above just one candle making the highest high. So it is a minor top. If we just top can get broken, sorry, I have catarrh, my nose is getting blocked. So, like I was saying, this shows now, for having this close below this, that we have a top, minor, intermediate, and major. We have a top. Now, what are we to expect? In swings or in market structure, we have this move here, then move here. Now, this is a swing from here to here. The same thing, like I said. Now, for this to be the top of this swing, this is a slow. If price wicks below it, it shows us one thing. The market is reversing. Are you getting me? Now the swing, that is a invalidation point. For price to go below this, if it closes below it, as in price close below it, then price has reversed. It has turned. But if we have a wick below it like this, it means we are grabbing liquidity that are below the lows. So wicks, like I said, is a form of stop hunting, deviation, or manipulation. It grabs liquidity below here, traps sellers who are shorting this market on breakout or breakdown, only then to trigger their stops into a buy order for the price to rally up. So, for price to move below this invalidation low or the low of this swing where we have a confirmed top and not close below it, shows that there is probably a stop hunting or stop reading going on in the market. But if we have a full close below it, below this lows, then it means the market is not just ready to stop hunt, but then it is ready to reverse. That is why sometimes if I have to place my stop here, I do not want to place the stop until I see that price has fully closed below this low. when price closes below this low, even if my stop loss is here, I will be ready to exit the market. But if price just squeeze below it and they close above, then I will be watching. Markets can still reverse with even a week, yes. And what do we have here? This confirmed that we have a break of structure like this. We have this structure to this point, to this point, not to this point. Then we have a break of structure. It's still a lower low, yes. So for us to make a lower low like this means we have a supply at the top here. And if you have to analyze our supply, I don't want to go into supply and demand here, it will be at this point. And what did we see? This week showed us that the market has hunted these lows, which means price is likely to go higher. But going higher doesn't mean that we do not have a supply here. We have a valid supply here. But then you just want to be careful because price has not shown you that it is seriously ready to go down by closing below these lows. It has raided the stops here, so it's likely to go up. But then when price came into the supply, what happened? It got sold off. But the selling pressure was very little that we found support again at this point, only to make a new highs. So that minor top got taken out. But this does not mean that it is not valid low. We had a valid low. And when you look at your each candle, when I said we need the for this point to make a top, it is the highest making high candle. We want to see price close below its lows to validate it. Going below means yes, it is correct, we are pulling back. But to validate that we are seriously pulling back, we want to see a close below its low. Same thing for the lows. This is the lowest candle, lowest low making candle, so we want to see a close above its size and want to show that we have a bottom here. And what happened? We have a close above its side here, and we do not just have a close above its side, we have a close above that swing high too, which means we now have a new swing, and this is a swing bottom or the structural low, and this became a structural high. Now looking at this again, we have this highest making high candle, and this is low, the low of it. Do we have a close below of it? Yes, we have a wick below of it, showing us that the correction is imminent, but it's not yet confirmed, right? We can just have a low of it, yes, and that will be all the correction. But if we have a close below it, then it means that the correction is serious. We can come lower and we can just make a 50% retracement. So we had a close below it, which shows us that this is a top, and this was the candle that closed below of it. Then we even had it making lower low to its lows, even it made higher highs with size, which is an outside bar. So we had this swing, then seeing candles close below this highest making candle, highest high making candles lows, means we have the pullback already. Then the moment we have this higher highs, it means this is a valid low for this structure. So that is a valid swing now. It is a valid pullback because we close below the low of the highest high making candle. So this becomes a new range, and this becomes a structural low, which is also a invalidation. Price going below this low means price is turning or likely to turn if we close, if we move below it with a wick like we had here. But if it goes below it and close below it, then price has turned. So let's see what we had. Okay, we have this deep red candle moving below it, and not just move below this swing low, it closed below of it. But then this was a highest time making candle. Do we have a top at this point? Let's see the lows. This was the low of the highest high making candle. And yes, we have closes and even moves below its lows. That means we have a top. The moment you see this closes below its lows, it's showing you that we have a top and we are making a decent pullback. And the moment we close below the swing low, which is the invalidation, it shows that the market has reversed. This was a point of your confirmation that the market has reversed. If you are longing at this point, the moment you have these retracements, you want to get out. Even though sometimes, like I said, you have to candle something. Like you have a close below it and the next candle closes right inside of it. And that is what happened here. We have a close below the lows of the same validation. Then the next candle close right above it. And if you look at this particular candle, it retested these same lows and used it as support to rally. Some people will see this and say price will still go higher. But then what happened as per this chart was that this support price found here after counting people immediate turns. It doesn't mean that there are people who are breakout traders selling on breakout or breakdown of this trade here of these lows. Their directional bias is correct. But price is just wanted to make a retest of that top before it goes down. So it's used this as support. Many people will get stop out if from their short, if they entered on breakout or breakdown, only then to go long on this support. Then price came here, only then to turn bearish again. So whatever longs is happening after break of the structure is just liquidity to fill short orders. If you trade supply and demand or support and resistance, you know where to enter this trade. That is not the scope of this lesson. So going below these lows now shows that this is a top. Now this is one single candle. This is a high. We have closed below it. So, and now this is a up candle. You know, like I said, we have swings can also be one candle. So this is what we have. We have this one candle now from this low to this side. Sorry. That is one candle. Then now we have a move and a close below of it. And that is our two candle formation. And that is reversal. Then we have a retest of the top and then we came down. So if you look at this point now, we made a low here, right? And I think you can see why we made a low. This was the last making low candle. Then this was the side. We closed above the size. But then look at this move here. Look at this move. Does this look like it is a valid move? Yes, we have a bottom here. We have a bottom and we have a pullback. But that pullback is so minute that it becomes so insignificant. Unlike the ones we have had here. That they are a bit interesting because we got big candles. But look at it. Price started becoming weak. Volume started becoming weak. Showing that the momentum of sellers is getting weak. So if you want to play it, you can still play it. I played it and I lost on it. So this was the bottom. It closed above it. So we are at the top. And therefore also have a top. That means we have a pullback, right? But the pullback is so minute, it's so insignificant. Then I wanted to scrap it. Then we had a move lower below the lows. We didn't close below it. But then I was really structural. Then we had a move up again. And then we had this breakdown. Hope you are following me. Then this became the low. Let me not. It will be hard to remove. So this became the low. The lowest low making candle. This was the side. We had a close above of it. And remember what I said with this image. Major tops. And this is the bottom where we have 1, 2, 3. Then the next candle is closing below above 1, 2, 3 candles. Or intermediate closing above 2. The minor I didn't write it, but then the minor just S this one. So it's when this candle closes above one previous candle or the candle making the lowest lows. So look at this point here. We have 1, 2, 3. Then we have this candle closing above 3 previous candles. This lows was clearly lower than this all other lows. So it became like a major bottom. Then when we came back into it, we broke this structure. This was the high leading to this low. So we broke structure. I took a trade here. On this point I got filled, but then look what happened. We made widths below it, My stop loss was below, but we was below it. No, but then we closed below it, showing that the market has turned. So this long was no longer good. So we had this top, we closed below this, so it is a valid top, minor, yes. Then we had this low. If you look at this low, we had this low, but then we made another low lower than this, so this becomes a low. Do we have a close above this size? Yes, we have a close above this size. Then we even have another high here, then another candle breaking down, making new lows. So we are now this what's it called, this high, then to this lows. Let me just leave it here like this, to that low. Then we have all these blah 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 movements. We tripped it going above it. This is our new invalidation for a long, right? So we have a wick above it, meaning market is turning back to the upside. But if we have a close above it, then it shows that market has turned. But then I wasn't willing to wait. See, this movement already taking me out. Then, like I trade my supply and demand, I do my zone, I got filled in. And I was lucky, not just lucky, this shows it was turning, but not confirmed. So I took the risk and it paid out. I exited around here. So look at this point now. We made, from this move down now, we made this top. Do we have a close? Below is low. Yes. That means we had a pullback. We had a pullback. This was a higher side making candle. This was a slow. We closed. We didn't just close. First, we made a lower low, which shows us that yes, we are making decent corrections. Then we had this close below of it, and it was a good sell-off. We had huge volume on the sell-off, and it closed below this. So we had a decent pullback, rally up, pullback. Even the pullback is minute, but when you talk of structure, I don't want to go into complex structure now, so let's just keep it simple. So it's still a structure, right? So then we have a structure low, because at the end of the day we had price going above this size. Then we made this very high. This was the low of the last high. So did we have a close below it or a move below it? Yes, we did. So the moment we have a move below it, that means we have a top. But did it close below this? No. So that is a minor top. So I wanted to take this on. People know me, knows this is an OB. The last what's it called? The last down candle. Moving or breaking structural highs or continuing structure. But then I do trade the last low making candle like this. I wanted to take this trade. After I exited at this point, I made almost 5 to 1 on this particular trade. So I wanted to take this trade. I saw the top. I got out because of the top. It made the top, so I got out. Then price dropped. Then I was like, yeah, I said it. Then I wanted to look lower. But then I went to look on the 30 minutes time frame. Keep this in mind. So I went to the 30 minutes time frame to see. And what did I see on the 30 minutes time frame? This was the highest I make a candle. Its low was here, right? So do we have a close below the low of the highest make candle on 30 minutes? I don't know if you can see very clearly, but it's like we did with this particular candle. But then it was very small, very minute, that it convinced me that no, I don't want to risk taking this trade. If I had taken it on the 22 minutes, I would have been fine. And as you can see, it ended up being a very good trade. This would have been my play. My stop, red line stop. This would have been 3R. Probably we have 4R here. So I would have taken at least 3R profit from this trade if I didn't look at 30 minutes. Even 15 minutes trade, this was the highest I make a candle. This was this low. you can see that before we made a close below of it was at this very point. So even we made a very large low here, so it wasn't convincing for me to take. Then looking at the 4 hours, this was it on the 4 hours. There was nothing there. No, actually there is something, because we have the week of this low. Okay, this was a correction, so it was before this happened. So basically there was nothing. Then I went on to the 90. I saw this rally, base rally, but then I wouldn't just want to take this rally, base rally. It will become very big. And normally, if there are no valid pullbacks, I don't take rally, base rally. So seeing these moves, it convinced me not to take this trade. I would have entered there at this point. Yeah, stop would have been somewhere around. I need to use my tool to get it accurate, but somewhere around there. And this way would have offered me at least minimum 3 hours. But I didn't take it. That is why at times single time frame is beneficial. You are looking at this time frame, you are validating pullbacks, you are validating swings. This is another good pullback because we close below this. So if I'm to enter this trade again now, I'll be looking at anywhere. Well, this is the last low making candle, so I'll be looking at this point. But then if I then proceed to go to 50 minutes, it can change my bias. Now we have this last low making candle. Then you have to increase your zone. Or if I go to the 90 minutes, as you can see, we have this candle. It made a lower low to this. It is a valid pullback here into this zone, but then it's like I'm still taking this same zone again. So these are the things that at times that can distort your mindset, and that is why the use of multiple indicators is not the best, because one is telling you to take a decision based on this, but the other is telling you another thing. It is just like time frames. If you are using multiple time frame analysis, that is why you have at least minimum 2. You have your analysis time frame, then you have your entry time frame. So if your analysis time frame is on the 4 hours, you're only looking for zones on the 4 hours. And when you have your zone on the 4 hour, until price goes into that zone before you go to your lower time frame, which is your entry time frame, to then look for break of structures to the upside, or break of trend line, or break of zones. Then you pull the trigger. So that is a different thing to when you are scalping or you are trading just single time frame. So I missed this very good trade on my new front time frame because I went to check another time frame for confluence, and 22 minutes was the only one having it as decent as I would have wanted. So being the only one having it as decent as I wanted, I couldn't take it. I wanted at least maybe 15 minutes to have the same thing, or 30 minutes. But they don't. So I missed out on a very good trade. So with this now, that is the way you can validate tops and bottoms. And the way you validate tops and bottoms is the same way you validate swings. There is one same thing, I think, with it on Reef. Can't exactly tell here. Okay, let me use this. Looking at this particular candle from where you can see that this was a clear high, this was a slow, and all these candles, why they are correction, but they are consolidation. Many people, we take them like this, that we have this high, low, high, low, high. Some people will do like this, but high wouldn't do like this. What I will do is, if this is a valid high, okay, yes, then we have a low to an high, to a low, to an high, then sideways. that will be a rectangle. So we have a rally, base, then rally. Even here we didn't quite close above it until here. So everything here is sideways action. So if you are taking this as the low for this movement, and that if price goes below this, then you have broken structure, it's not correct. It's not correct. So let's take this lesson into a lot of consideration. And that is why sometimes all these kind of big moves that happens, they do distort TA. I do say this a lot. Okay, look at this move up now. We have this move, then we have this move all to this extent before we made a low below it. And this was at the point that we started a correction. The moment we made a low below it. Not closing below it means we are not seriously correcting, but it is a correction, right? It is a pullback. Because this was the highest IMK candle. This was a slow. Then we made a lower low to it. So we are correcting. So this now seems to be an higher low. A lower high, then a lower low. So we are correcting. Then look at this again. Look at this particular candle. This was its lows. This was its high. At this point, it was correction, and this is what we call inside bar. Inside bars are sideways. Then here we made a lower low to it. So yes, we can say this is a high, this is a low, because we made a lower low to it. But personally, I want to see a close below this. That is just the way I filter out my own trades. So that is it, guys. I hope you understand with this long video how now to validate pullbacks and swing corrections. If you have any question, you know I'm always at a service and I always answer every question you ask on the Telegram group. If you cannot like the video, if you like it, or you cannot ask your questions on the comment section, then you can put it across in the group. So we will discuss it, and then we will both learn from each other. Alright guys, that is it for this video. Thank you for watching.